Hey, good morning, Bob. Trade Genius, the 21st of December. And a lot of people ask me, where does this all end? Where do we stop? And my view is, and it looks like it's playing out, is that they are unwinding the Hillary coronation trade. So in 2015, the Chinese had a hiccup in their economy. And we're going into the last year before the next presidential election, where Obama was going to pass the baton to, to Hillary Clinton. And there was simply no way the world progressives were going to allow economic turmoil. And they all turned on the jets. You got to realize that the Chinese and the American administration had some sort of arrangement here. You buy our debt, we'll let you steal our country. And so they just turned this thing into just glide mode. And so for 2 years, we've had this really, really benign market. And as soon as Trump got elected, they turned the gas back on, raising the interest rates. Some could say it's political. Some could say, hey, we got to burst this bubble. Whatever. It doesn't really matter at this point anymore. But the point is that it's being unwound. And it's being unwound with rapidity. And here's the oil chart. And so oil has collapsed now. It's down probably 40% from where the highs were. This is the next support level. We already blew through 2018 lows. This is the 2017 lows right here. These are in danger. So money's coming out of the speculation. And what happens is, when in the futures market, if prices start to go one direction hard, the producers, they jump on the train too, because they're trying to protect their production. So they're going to short right along with it, and you get this magnifying effect. They call it convexity and acceleration and gamma and all these crazy names. What it is like, I'm scared out of my mind. I got to protect my position. And so they short right along with it. And that happened before. And I'll zoom out and show you. So this is what it looked like last time. Okay. This is the oh shit, China's in trouble trade. All right. And now we're getting it happening again. And so 43 is probably first support area. 37 area is probably a second support area. And this is the complete unwind. Jerome Powell was pretty clear. He said he's not stopping the asset purchase reductions. Okay, whether he stops raising interest rates or not, I think that's to be seen. But they're bailing out of holding these assets, and they're shifting it all back to the banks. Well, the banks are the big speculators. People don't realize that. The banks are the source of all our anxiety in the world. And so they got to unwind their trades, because they have to take back all these assets that they swapped with the central bank for cash to speculate. That's why we're going down. That's why it's 1-for-1 with the asset purchases and with the speculation in the market. The banks got to sell to buy back the bonds, to buy back the mortgage-backed securities, etc., etc. So my view is we're going to come back down to $29. People don't also realize that there's oil everywhere in the world. You could stick a straw in the ground just about anywhere, and you could pull oil out. This whole peak oil thing was another just charade that you get from the people who are in charge. And it's just so annoying to me, because they just constantly are lying to us. And oil you could pull out cheap enough if you need to. The Americans proved that. They said Americans couldn't put oil out of the ground for less than $70 or $80 a barrel. The shale guys are pulling it out. They're still profitable, by the way. And some of them are profitable all the way down to $30. So that's that. And I'm going to show you ES now too. Okay. So here's ES. So we're coming down to we blew through 2018 right here. Okay. And here's 2017 support areas. Okay. And then here's 26 support area, 2016. And here's the unwind. I've been saying for a year, we're going to get to here. Okay, there's just simply no doubt in my mind. And the reason being is that with these indexes, they have what's called market cap indexes. And so you could buy the top 10% of the index only, and you could force the whole index up in an exponential fashion, because the higher the market cap, the more credit you get. Okay? And so now those are being sold. And then you get a cascade effect again. And a lot of ETFs cross-own the same stuff, and they're all unwinding. So we're going to come back down to here too. So if you're like me, my 401k has been in cash since the beginning of 2018. I'm not touching it. I'm not touching it till we get to here, and then I'll start adding back. And we might go into recession then. If we go into recession, then we got to look at, you know, some of the support areas from 2009 to 2016. But by then, I think they'll be so scared, they'll be printing money like it's going out of style. And my view is that we'll just be in the commodities for the precious metals, because currencies are just going to be blowing up left and right. So anyway, I thought I'd share that with you. Merry Christmas. But I think we're going to get a bounce Santa rally now, and we'll evaluate things towards the end of next week. I think January is going to be a January to remember too. I think January, February, I think is going to be pretty brutal. And then I think going into spring, summer, I think we'll start moving higher again. So anyway, you guys have a good one. Thanks so much for listening to me. And if you're interested in anything that we do, specials for Christmas are ending tonight. So we got some really, really inexpensive offerings that can help you guys make money every day in the market. And we're good people to trade with. Have a good one. Bye-bye.